everyone, and welcome back. I know it's been a bit of a hiatus. I think we've been gone for a few weeks, and we do apologize for that. A lot of stuff has been happening in the crypto space, so I know we missed some coverage there, but Chandler and I have been super busy launching Astaria. But with that said, there's been so much that we want to cover. A lot of this will be news that you've already heard, but we're going to bring our own take into things. And so let's jump right into things. Obviously, there's a situation with the SEC suing Coinbase and Binance. In addition to, that breaking news, there have been some really positive developments from the Coinbase side, and I think to some extent the Binance side. The case is a lot more clear for Coinbase than it is for Binance, so I think that's what we'll focus on. But you can see that Coinbase is really fighting the good fight. They're, as you can see here, arguing in court with the SEC that the SEC does not have power to regulate these digital assets and that new legislation needs to come from Congress. I think this is important work. I think everyone's very appreciative of Coinbase for doing this. And ultimately, I am pretty confident that it's going to lead to the right direction, simply because the SEC has trouble litigating. They have, it's very hard to scale suing each individual token issuer for issuing what they call a security. We're seeing with the Ripple case, some reports are that the SEC is losing that for XRP. And XRP is probably more of a security by their definition than almost any other token out there that we can think of.
Yeah, this is a continuation of the story that we chatted about when the enforcement action first started. At the end of the day, I think you're 100% right here. Coinbase is fighting the good fight, and we knew that whatever the SEC did by going after Coinbase, they had to make sure that their ducks were in a row because Coinbase's ducks are in their row and they know exactly what they're doing and how to go about this. And this is just a spill out of exactly everything that Coinbase has been seeing and preparing for. I think news like this will continue to come out. I think news like this is also something that I think the crypto industry is can't wait for more of. And yeah, I could not be more excited to see what happens as a result of this. It'll not only just be really good for Coinbase to finally get the surety that one company deserves, but they're also very cognizant of the fact that what the answers that they're looking for as a company will apply to an entire industry. And I think there's one like undertone that Coinbase has always done in their external messaging outside of just this particular litigation is to say that they're very well aware that this entire industry rests on some of the decisions that get made in the courts that they're in right now.
Yeah, totally. And I think we've seen some really interesting things since then. So let me pull this up as well. So obviously the big news here that's spurring, let's say a resurgence in especially BTC's prices, this possible ETF. So if you guys aren't familiar, BlackRock filed for a Bitcoin ETF. Bitcoin ETFs have historically been denied, but BlackRock is seen as the best in class ETF issuer. They have something like 560 something approvals for ETFs, and they've only lost one approval for an ETF in all of their history. So there's some speculation here that the SEC wants to lay off a little, that maybe with the new regulations passed in England and in some other countries that we actually do want to keep this innovation here. And so once BlackRock filed for this ETF application, so many other people piled on. I think most notably Fidelity piled on, and they did. They applied for that today. And so to me, this signals that there's probably something we don't know. I think BlackRock signaling and applying for an ETF is big news. I think they wouldn't do it if they thought they would lose, simply because we've seen other ETFs rejected. So I think this is pretty hopeful. Obviously, like an ETF opens up the ability for people to purchase assets safely from their non-custodial brokerage accounts, and it just increases access for everyone. So I think this is very positive news. I think it's pretty telling. I think the market might be a little ahead of itself. I don't know how bullish this is in the short term, aside from just being a narrative. But, presumably in the long term, when you're crafting your retirement portfolio and you have these tax advantaged retirement accounts like a Roth IRA, which is something I use and many Americans are probably familiar with, why not add a portion of that to Bitcoin as almost like a hedge, right? Like, why not put 1 to 3% of your Roth into a BTC ETF that's extremely low cost? So overall, very positive news. I don't think it's preordained that there's a path for success here. If you see here, some analysts are predicting there's about a 50% chance that the ETF gets approved. No one really knows. I would guess it's a coin toss too myself. But yeah, what do you think, Chandler?
Yeah, I can't exactly speculate on exactly the number here. I understand what an ETF as an investment vehicle does at a very broad level, but the details of what the implications are from the application stage to what Americans do with it is something that's a little bit outside of my wheelhouse. But what I will say, and this is kind of just an anecdotal bit of interest, is the fact that the SEC will have to approve this, and then the other side of that equation is that the SEC has denied a bunch of ETFs before. I think some of the reasonings behind that will also come to light in a little bit more detail if this does get approval or if it gets denied. Either way, it'll kind of bring a lot more interest into the space. And then also the fact that the SEC and Gary himself has mentioned that Bitcoin is definitely not a security based on the fact that it's the most decentralized network. It has this a magic use case where the founder died, so I think that's well apparently died, and so apparently that's the one way to make sure that you're not a security. But the fact that BlackRock will probably have a higher probability more than anyone else also goes to showcase that I think from a regulator standpoint, having that your set of players that you can regulate, you have established relationships, you know how they operate. It's really easy for you to work with them. Is more telling than as an SEC as an institution that they'd prefer to work with those trusted players that they know very well, rather than let new players in and maybe kind of let the fox into the chicken coop, as it were. But I find that the fact that this is happening while the Coinbase suit is also happening just goes to show how multifaceted everything that we're kind of doing in this new industry is at the moment.
And from what I've seen, Coinbase is the custodian, I believe, for this Bitcoin, which is even more comical.
Yeah, yeah, I think that's the most ironic point as well.
One other thing I wanted to point out, so the differentiator with BlackRock's filing is that they add this surveillance feature. I'm not too familiar with the details, but this was sort of a requirement or a reason the SEC rejected, I believe, Grayscale's ETF. It's basically they're concerned about market manipulation, which, to some degrees is valid. And so they want this surveillance feature. And I see that ARK has amended their application for the BTC ETF to include that as well. So maybe there's something we don't know here, and that surveillance sharing agreement is critical to accepting and approving these ETFs. So we'll see. Moving on to probably more exciting news for our audience here, Uniswap V4 was announced, and they're going to build in public. And so this is going to be, in my opinion, a very exciting innovation. The Uniswap team is obviously incredible. They're one of the best, if not the best teams in our space currently. They've certainly contributed to a vast majority of innovation. And Uniswap V3 is really an incredible exchange. It's just been dominating. But here in this article, which we'll of course link below, they outline what Uniswap V4 is. And the TLDR is they want Uniswap to be much more configurable to allow people to build more and more on top of Uniswap V4. And they do that with these hooks. And so Chandler will fill in more info on how this all works, but you can see here some experiments that they're excited about that these hooks enable. So the hooks enable an on-chain limit order built directly into Uniswap, so you don't need a third-party application. They allow for dynamic fees based on, say, volatility, a time-weighted average market maker, which Paradigm has been researching for a while, depositing out-of-range liquidity into lending pools. So there's just a ton of stuff. Obviously, auto compounding is a big one and something people really wanted in V3 that wasn't there. So Uniswap V4, it looks incredible. I'm very excited about it. There's a lot of flexibility for developers. But the downside is there are obviously more safety challenges with these hooks. Every hook that gets added adds potential ways that you could get exploited. And so I'm very curious to see how Uniswap goes about approving hooks and what they end up displaying in their front end versus having that all done on other people's front end. So
the one thing I've thought about immediately is Uniswap V4 launched when no one was having any issues with V3. And that, I think, is just a testament to the fact that the Uniswap team is literally best in class. My one big overall statement that I think V4 demonstrates more than anything is the masterclass at which Uniswap have from a business standpoint, and what this actually ultimately means for them on a business level. I think there are many other podcasts that I would like to discuss what hooks are, what the singleton contract is, and many of the details, and I'll give a very brief overview on what those are. Singleton just means that all contracts get all pools get deployed into one contract, and you have a massive gas savings for deploying pools. That's pretty standard. That design pattern's been used before. The new design pattern here is hooks, and I think you quite rightly said that hooks offer a lot more versatility for users, but then a lot more risk when it comes to the logic that you can implement. And there will be safe hooks, there will be unsafe hooks, and Uniswap will basically, I wouldn't quite call it the App Store approach, but they're definitely opening up developers to build more intricate logic in terms of how a particular swap happens. Now, the masterclass element behind this was, if you looked at the AMM ecosystem, you had to have a whole new protocol for every single type of logic that you wanted to implement. And not only did that create a lot more smart contract risk, it also added fragmented liquidity. And so you could argue that, yes, hooks does add a lot more kind of security concerns to the problem, but that existed in the industry as well by new AMMs trying to innovate. And so what Uniswap is being a lot not as well spoken about this fact, but that's basically their play to kind of dominate the market. They're already dominating the market, but now this is the nail in the coffin for any new AMM to try and innovate against them, because the argument here is simply, let's not build a new AMM to compete on Uniswap. Let's build a hook to build our logic, and it'll live on Uniswap. So that's what I think hooks are going to be extremely amazing for. And I think Uniswap will, I think, in a very short period of time, become the monopolistic juggernaut within our space, for the good and bad of it as well. The other contentious issue here that a lot of people have questioned the Uniswap team about was the licensing. I think the licensing thing is always going to be a bit of a contentious issue in our space. At the end of the day, it's a business license, which means the Uniswap team own this license for a short period of time. I think it's 4 years, whereas the previous license was 2 years. And then at the end of the day, I think that any sort of free speech, open source software teams are going to kind of raise their concerns around this. And at the end of the day, I think this is well within their rights to make the call. The other issue around what I don't think people are picking up is the fact that this business license is, you have a right to copy when it goes open source, but you also then have to make it open source. You can't go and copy the Uniswap V4 contracts and then make it a closed source protocol afterwards. And so it still actually has a lot of elements of open source within it. It's just the idea of Uniswap giving themselves a quite rightly well-deserved front-run advantage. And I think what was quite interesting is that everyone knew what Uniswap V3 looked and felt like, and that license expired, and no one could copy all three. And now V4 is just them kind of breaking away from the peloton, and I don't think anyone will be able to catch them.
Yes, I have a very different perspective. Like, for one, I think Uniswap can do whatever licensing they want. Not that I think you're disagreeing with that, but like, I think they should do whatever they want that's in their best interest. But I would also argue that they have this token out there that has potential fee revenue from swap volume. I believe that they have an obligation to token holders, much like if you had a share on the public market, you have an obligation to shareholders. I think they have an obligation to token holders to protect that value and deliver value to them. And I actually think Uniswap V4 changes how I think about the Uni token in a positive way. I haven't purchased the Uni token. I don't plan to for a while, but seeing Uniswap V4 as more of a platform, I saw Hayden talking about this, and he said, like, instead of Uniswap being its own app, we're thinking of it like a platform, much like the Ethereum ecosystem is a platform in and of itself. And with these hooks, you're going to be able to build like any sort of type of application you could want on top of Uniswap. And I was very surprised. I shouldn't say surprised, but I was pleasantly happy with the fact that Uni V4 still has the option to direct value to Uni token holders. I had kind of thought that the Uni token was like abandoned by Uniswap. They were only focused on driving value to the equity. But with Uniswap V4 being this expansive platform, I do wonder if this changes the value prop of Uni in a positive way. And I don't think that's been reflected yet in the market. You can see it's basically been flat to down over the last year or so. The token's trading, for those just listening, at under $5. The fully diluted valuation is $5 billion. And the current market cap is 3.7 billion. I think there's time to wait. I don't think there's any rush to buy anything. And obviously this isn't financial advice, but me personally, like, as we see how Uni V4 is being built, and it's going to be built in public, and we're going to see different types of features being built. I think, like, for me personally, the Uni token becomes something I might actually be interested in. And like, I know it's against the crypto ethos in some ways, but I am happy that they're protecting the license there and focused on driving value seemingly to Uni token holders. Yeah, I think it's exciting times for Uni. I'm super excited about V4, and I think they're going to do great work again. I mean, it's hard to bet against this team for sure.
They mentioned it somewhat subtly, but Uniswap idle liquidity going into a lending pool. Do you think
Mm.
Uniswap will just build their own lending platform, or will they make that liquidity flow into the other lending platforms that are more established right now? Your Aavas, your Compounds.
It's really interesting you bring that up because our CTO at Astaria, Joe DeLong, created a mechanism. I think they called it, it wasn't Kashi, but I forget the name of it. It was they had capital in their sushi positions, and unutilized liquidity was often lent out. I mean, if I were Uniswap, I would build a lending protocol. They have the resources, they have the talent. Who knows how much they can innovate there, but like, they have this moat of like brand awareness, brand trust, safety, and the capital. So like, why not? I mean, they seemingly want to be the front end for DeFi, and it's pretty apparent when you look at like the wallet and how they're trying to make everything as accessible to users as possible. So we'll see. That would be really interesting. You're making me bullish on the Uni token. Maybe I gotta run off and buy it, lose all my money. I mean, it's so hard to buy any of these tokens relative to ETH, right? It's like they all just underperform ETH. So
Yeah, and even though Uni is the poster child of the entire ecosystem, they are still underperforming ETH as well.
we've talked about EigenLayer, and since I think we last talked about EigenLayer in late May, Vitalik put out an article about not overloading Ethereum's consensus and not making restaking, or just outlining the possible perils of restaking, things that we've talked about before. So Chandler, why don't you kick us off here? I know you wanted to highlight this article, and then I know you also have a podcast recommendation to share with our viewers.
The whole concept of EigenLayer and restaking has got the industry extremely excited. And when anything new, genuinely innovative happens within the blockchain staking ecosystem, you get a lot of voices that come out. One of them being Vitalik, and also some of the big Ethereum researchers that helped build proof of stake. And let's be quite frank, proof of stake took many years to iterate over. It was probably one of the most researched pieces of software upgrade technology that I've ever come across. Maybe outside of like a defense contract or something, in a proprietary company, but this was all done on an open source level. EigenLayer comes around. It's a new concept. A team's built it out. The team's fairly small, very high quality team, and they built out this idea of being able to sell your consensus as a service outside of the ecosystem. And it raised quite a lot of discussion around that. The discussion, in my mind, has always been a trade-off, and there was never a perfect answer. And I think both the EigenLayer team and the core Ethereum researchers do agree on what it's good for and what it's not good for. And I think that's been the evolution of the debate. Vitalik, in this particular article, if you go down a little bit below, explains reasons why different parts of the technical consensus make sense, and then there's also parts of consensus which is socially based, how those differ, and how the different risks that you could have. And he listed out a couple examples. These are very Vitalik examples here, but at the end of the day, the concepts make a lot of sense. This all really, and the reason why I'm very excited to talk about with you this today, is that there was an extremely valuable podcast that got recorded on the Bankless team. Bankless have always been a high quality podcast. They were talking about how EigenLayer will change Ethereum, and it had the big heavyweights in the ecosystem, Vitalik being part of them, Justin Drake, and it was an extremely well thought out debate, if there was ever a way to describe it. And it got me really excited about just the early days of when blockchains were around, different types of consensus mechanisms. I remember the intellectual debates that were happening around just Bitcoin and Ethereum, and those were the only two valuable design trade-offs that existed.
EigenLayer, I'll show you guys the dashboard now. I'll pull it up, but it effectively, you can see here, they're testing 3,200 ETH deposits for each of these three LSD tokens, or you can do native restaking with your own validator through their pod. I think the big challenge here is going to be like this is going to increase adoption for Lido staked ETH even more and more than before, which like is probably a detriment. I think like, you know, Rocket Pool is great. We all stand by the ethos, but there's this tragedy of the commons issue. Like, why would let's say I only have 100 ETH, that's a lot of money, or 300 ETH, whatever. I'm not really going to make a difference by switching from Lido staked ETH to Rocket Pool ETH. I'm going to go with what gives me the highest yield. That's Lido staked ETH. It performs the best. It has the lowest fees. It's the most liquid. All of the other options, you're sacrificing something. So I think everyone's going to be using Lido. It's going to increase Lido adoption, and then they're going to go for that extra yield on top of that on EigenLayer. And I think what happens here is the governance for Ethereum is basically handed over to the Lido governance token, LDO. So I know they're working to mitigate this issue, but like you could assume that there's a world where Lido controls most of the validator set and controls what transactions go through, what forks can happen, etc. So, they're probably going to have a token to govern this thing. I mean, it has to be decentralized. So you should keep an eye out on their Twitter to see when they raise those 3,200 ETH limits in case you want to deposit and be an early adopter of EigenLayer. It's definitely something I'm looking into. I unfortunately missed these deposits windows, but hopefully I'll get in on the next one. But yeah, I just wanted to call that one out quickly. But with that, we did want to close off with some market chatter. We're not, huge market people, but who doesn't love talking about price? So with the ETF news, Bitcoin has done very well. It's above $30,000 here. You can see there was just a massive price move into the upside when all of that news broke. We'll see what happens with the ETF. ETH has been doing pretty well, but not as well as BTC. It's about 1850. And then the thing I really wanted to talk about here was just ETH BTC grinding down. So you can see for the past a little over a month, ETH BTC has just been sold off like very heavily, which is a little unfortunate and for me surprising to see. I think, I think we all think that are listening to this that Ether is more valuable of an asset than BTC, and so I don't know if this is just the ETF news and people want exposure to Bitcoin in case there's some crazy surge from everyone buying into this ETF, or if it's more just we're in a bear market, social interest is low, people are leaving and not doing things on chain. On chain activity is quite low right now, and people are just swapping to Bitcoin or selling off ETH more so than BTC. So this has been a little disappointing to see. I don't think it's anything you can really trade off of. I can't swap my ETH for Bitcoin and end up holding it. I just don't have conviction there. So for me, I guess I just got to ride this thing down and hope it doesn't go too low. But any thoughts there, Chandler? I know you have some Bitcoin as well as Ether, whereas I'm only Ether.
Very simply, in my mind, this chart is a demonstration of exactly what's playing out in the news. Bad news on the Ether side, lots of FUD, lots of regulatory action. A lot of what's actually being implicated implicitly on some of the SEC regulatory enforcement actions is Ethereum adjacent tokens. Every Bitcoin maxi is loving this and lopping onto it and trolling everyone on Twitter. If you don't follow the Bitcoin maxis, your mental health has improved. On the Bitcoin side, they're very, very happy because the Bitcoin ETF is being kind of put forward by BlackRock. I low-key think that in some way, shape, or form, the Bitcoiners have infiltrated someone at BlackRock and convinced them to do this. But nonetheless, I am still happy that Bitcoin's doing well. I never want Bitcoin to do badly. And having these two bits of news really is just the pendulum swing that you're seeing grind down here. What makes me happy at the end of the day, though, is that ETH is still up in dollar terms, and so our filthy fiat is being eaten away by gains in ETH, and I find that quite enjoyable. Green charts on the ETH side relative to dollars is still very, very bullish. And so I think that this is going to be a local environment. If you look, I don't know, a little while ago, literally a year ago, there was also a lot of FUD in the ETH side. It recovered quite well, and it's been kind of teetering on this level. I think we're in a fairly stable holding pattern relative to Bitcoin. I think once the FUD around the regulations and the ETF positive news play out, we'll see it kind of recover and economics take a long time to play out, and nothing on an economic timescale happens in
Yeah.
a very short-term horizon.
Yeah.
Very seldomly does that, and so I think the superior economics of Ethereum will play out in a much longer time horizon than what I think most degens are used to.
I think I think you just bring up a good point in that assume the BTC ETF is approved. I heard as early as like July or August it could be approved. It could take maybe up to 6 or 9 months, something like that. But like once that's approved, it like everything in crypto that I've ever seen has been sell the news. And so like once the BTC ETF is approved, I think the attention goes to, oh, when's the ETH ETF coming, and speculation around that and filings for that. So I think you're right. I hope you're right. Obviously, I'm biased there. But yeah, with that, that's everything we wanted to cover today. Again, sorry for missing the last several weeks. We've just been busy launching Astaria and making sure everything works well over there. But hopefully, we'll get into a more regular cadence. So thanks everyone for watching, and we'll see you guys in the next one.